Hi, welcome to the Interaxis YouTube channel, interaxis.io. Today we're going to talk about something that's probably overdue on this channel and these topics is protocols. I talk a lot about protocols. I've talked about lending protocols and portfolio management protocols and governance protocols and such, and I haven't really defined a protocol. And if the whole point of these videos is to help most people better understand what's happening in cryptocurrency, blockchain, decentralized finance, finance in general, probably good to define some of these terms. So today we're just going to talk about really what a protocol is. Some of the protocols that I've talked about and that I really like talking about are there's SET protocol. I've talked about Melon protocol. I haven't talked about it, but there's one called Aragon, which is really pretty awesome. There's UMA. There's Band. So I'll, talk here real briefly about some of these because we need to identify some. So a protocol is really nothing but kind of a framework, a series of rules that says, here's how this particular service or product needs to operate. How that works is you have here, in the case of most of these, the Ethereum blockchain, right? And what SET protocol does in this instance is it says, okay, we're going to create this a token, which is essentially a portfolio management tool. And it might give a certain set of rules. And the rules might say this particular token is going to own 75% ETH and 25% Bitcoin. Okay. Now what SET has done is it has created the rules so that I can go in if I'm able to write code and say, I'm going to create this using SET's rules. Now I can go create this token no matter what. Right, because I can just write the code, send it straight to the Ethereum blockchain, and it can work. The reason why SET has gone about, they've taken their time and effort and money and created this protocol, is because I can create the token, and it can go in here using this SET protocol, and someone else can pull it out and can buy and sell. It can go on an exchange. So it's very important to be able to create the framework of rules that is accepted by anyone using this so that data can get in, data can get out, because that's really the most important part of the blockchain is the data going in, the data coming out, and we see it the same way. And once that happens, we can write other programs on top of it. So we can write a trading program or some sort of program that reads the value of this and puts it in some sort of aggregator or something. But the key is SET has taken the time again to write the framework and the rules that say if you want to create some sort of token that has these rules to it that says I'm going to own 75% ETH and 25% Bitcoin, or the one they wrote recently that says every time that ETH crosses the 200-day moving average, it's going to rebalance the portfolio. They've created the framework that allows you to put in the rules. And because of that, everyone who either writes that token and puts it on the blockchain or tries to read it from there and trade it or value it sees the same thing. We all use the same framework. Okay, Melon has kind of done the same thing, but what they've said is not just in terms of token, but they're going to take the entire fund management function, administration, everything, and said, here's the protocol. Here's how it works. You can build your own fund, and anyone who comes in and uses the Melon protocol kind of does it the same so that the blockchain can read it the same. It's all encrypted the same and everything. So when you're trying to pull data out that might be encrypted and is very secure and safe, it's still in here and transparent. So if I have the ability to pull this data out, I know to use their protocol, and I can read this data. So if I'm somehow invested in a fund that's using the Melon protocol, I can use probably some sort of software and pull the data out and know what my value is, know what trades have happened and such. Aragon is a protocol for governance. So if I want to create some sort of organization that is governed by code or by multiple people, Aragon gives me the framework that says, here's how your governance will work. And because it's in code, you can't really deviate from that. So Aragon has essentially created this framework that says, you all, everyone in here kind of agrees, here's how this will work. And then the code, based on that, is going to kind of dictate what we do. UMA has actually created a few different protocols. One of them is for created synthetic assets. So they help to create some synthetic assets. Why might I want synthetic assets? I might want them because I want to hedge or protect some of my positions, and those positions might either be with some investment I have. So I might have an investment in Ether, and if the price of Ether goes way down, well, I get hurt in some way. So I might have my ETH, as collateral on a loan, right? So I hold, say, 10 ETH, and I pledge that as collateral. Right, and so what that means is, and I might get, 1,500 DAI in return for that, right? But if the price of ETH goes below, say, 150, then I get this position gets liquidated, and I lose all my ETH, and I don't get the upside potential of it, right? Well, I might lose some money because I say, look, ETH is 170 right now. I'm going to lose 20 times this. So I'm going to lose $200. So I might go to UMA and I might buy some sort of negative ETH, synthetic assets that says I don't have to actually hold the ETH, but there's this asset that acts like it. So, but UMA has created a protocol so that anyone can really create some of those hedges or synthetic assets, and we can trade back and forth, knowing full well that what they're seeing with the data going in, I'm seeing with the data coming out, because we're both using the same protocol, the same framework. Band Protocol is a firm that's doing the same thing, but they're doing it with oracles, right? So what they're doing is they built the protocol that connects the kind of current internet structure to the blockchain structure. So a good example might be if I placed a bet with someone on the price of ETH, okay, or better yet, if I placed a bet with someone on a football game, and I'll call it American football. I say the Texans are going to win the game. They say the Cowboys are going to win the game. All right. We make the bet on chain. Well, you have to have some sort of oracle that says, here's who actually won the game. And based on whoever won the game, this is the person that wins the bet. So if I bet on the Texans, my friend Ron bets on the Cowboys. Once the game is over, we can go to use ESPN or CBS Sports or something like that website to actually tell the Ethereum blockchain who won. Well, Band is building the protocol that says we're going to connect the ESPN.com to the Ethereum blockchain so that will settle our bet, right? Texans win. I get the money because I'm the one who bet on them. Band is building that protocol. A really important protocol that I didn't even write up here that I probably should is a 0x protocol. So 0x wrote the protocol to actually build a decentralized exchange. So I can build my own decentralized exchange using their rules on top of the Ethereum blockchain. So how that might work is, let's say I wanted to build an exchange that only trades security tokens or only trades set denoted tokens. I can build that exchange using their protocol, and it makes it a lot easier. I don't have to build the whole thing from scratch. They've already built a lot of the framework. I have to plug in a lot of the code pieces to show what I want. I have to build a nice UI and everything. But they've already built a lot of the rules. So the question is, do we already use protocols? Is this something that's totally new? And the answer is, yeah, of course we already use protocols. We just don't generally call them protocols, right? So what I might do, for instance, if I need to get a loan for my home or a car or a credit card or something, right? I fill out I have a loan application, right? And a loan application is asking for my name and my address and my social security number, okay? And then they are going to take this information and they're going to go get my FICO score and fill it in here. And this is a protocol, because all this is just data that's going to go into some database here, and computers essentially going to read it and spit out, yeah, Adam can get a loan, and interest rate is going to be 4%. Here's the collateral, and then this all kind of gets packaged up and might get put into another security. And all they're doing is taking all this data here, my interest rate and everything else now, and they're packaging it into another security. So it's essentially a protocol that all the banks use to buy and sell all these different packages of loans back and forth. They just call it a form, right? I fill out this application or this form, and I might handwrite it, or I might fill it out online or something. But essentially, later on, someone keys this into some sort of database, and all that data gets stored, and that's the protocol, because all the banks have decided that's how it works. There are protocols for transferring money, right? The ACH, wires, SWIFT, those are all protocols that show how money is going to get transferred over, at one point, telephone lines, internet lines, and such. Those are protocols. Protocols are the internet's completely based on them, right? Hypertext Transfer Protocol is essentially the World Wide Web, the internet. The websites are on HTTP, right? And later HTTPS that had the security to it. But it's basically a framework that says, here's how you build websites so that people can actually read them. Here's the code behind it, and when you fill in certain parts of this code with other code, now all of a sudden you have a website that you can see. Email is the same way. The SMTP is a protocol we use to send mail. We don't talk about it anymore. You don't even think about SMTP anymore. But years ago, when the internet first came out, when email first started being used, you heard SMTP a lot. You heard about protocols. Now you don't hear about them anymore because we just know the internet and email and such. But those are rules, basically groups of rules that have been put together to make it easier so that everything can be easy and standardized. And once it's standardized, like once HTTP was standardized, now I can create a browser, and anyone can have the same browser, the same Google Chrome browser or Brave browser. Hopefully you're using the Brave browser to keep yourself a little more safe. But everyone can use the browser, and the browser will read that protocol the same way every time, so that someone else can create another browser and read the same protocol. Even though the browser might be a little bit different, the protocol is the same, so it's going to essentially read it the same. All right, so protocols are there, especially in the decentralized world. We need them. They're another layer in the stack. So when we start talking about the technology stack, here in the decentralized finance world, you have in this case, usually the Ethereum, but it's whatever the blockchain is here at the base. And on top of that is going to be the protocols. Let's say, okay, here's how we're going to get data in and out of this blockchain at a very basic level. And then you might have the dApps on top of that said, okay, we're going to take these protocols, we're going to make it easier for you to use. We're going to make it easy to fill in information, UI and such. Right? And we might take some of these protocols, more of them, and connect them together to make one dApp. And then on top of that, you might have the aggregators. Right? An aggregator might look across different dApps, but has to be able to read all the different protocols so that it all looks the same. So that the data that I'm getting out, because I'm not a programmer or anything, the data that I'm getting out is something that I can actually read, and the usability of this is something I can actually use and understand, so I don't have to read code. But before that happens, the people, the really, really smart, creative people developing these protocols have to do it in a way that it's this framework, and it's easier for the rest of us to build applications and aggregations and to actually use the system. So protocols are really important. I keep talking about them, but I haven't really explained them. Those are protocols. Some of the ones we see are again, SET, Melon, Aragon, UMA, Band, 0x. There are probably a lot that I know there are a lot that I'm forgetting, and I really apologize if I haven't hit them here. These are some of the important ones, but I wanted to get those out there and just show that or I guess just talk about protocols and why they're so important to us as we build this system. They're happening really fast, they're growing really fast, and because they're all open source, the ability to build applications and aggregations on top of them is happening really quickly because some of these really smart people are taking it upon themselves to build this, and I really appreciate it. So I wanted to explain protocols. Again, don't forget to subscribe to the channel, please, and hit us on our website, interaxis.io, on Twitter, @interaxis8, the number 8, and let us know if you like these videos, if there's anything else you want to see.